All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. No new challenge trades here this morning, but we do have some crossovers that are really interesting, where we could see some, emerge as the day progresses. One of them is Coca-Cola, which, is well. Here, let me pull it up. You can see has the 3-7 crossover on a down day, which we don't tend to see. But, it has that falling 20-day moving average, which may come into play, altering the consolidation risk component there. But, has a crossover action with it. We see Micron with a positive 3-7 crossover on it here today. I'm on record of saying, hey, I really think this stock goes and breaks 50. We're going to get another opportunity to jump in and play Micron here this challenge. I sure would like to, but we'll see how that plays out here when it comes to this afternoon. I do think this is one that when I look at the scan, I look at why something isn't triggering. Micron is simply one that the morning parameters are just tighter, right? And so not triggering for that. And then Netflix. And Netflix here, I sure wish would stop. That way can get in here, but it's still that same thing. Morning parameters more than anything. But you know how much I do like Netflix to go higher, and how much I do believe this whole talk of Disney Plus is bad for Netflix is just absolutely ridiculous. But I've gone on that rant before, so I won't bore you with that rant again. But both Micron, Netflix, some nice positive 3-7 action here on them this morning. And we do see Coca-Cola. In fact, if I bring up the entire scan here of just crossovers, you can see Coca-Cola, FCX, J&J, which was on the downside scan yesterday, and I mentioned, this is one that I thought it would trigger. It didn't trigger, and now it's got a 3-7 cross to the upside. I guess I know now why it didn't trigger. We have AT&T, which had a downside crossover, trying to get a little upside crossover to it today. But FCX and then JP Morgan, and this is the first upside crossover we've seen in a bank in a while, but consolidation risk component on it, it's extremely high as it sits right now. We'll see kind of into the close what that emerges to be. But a few more potential candidates here today than what we have seen. Now we have a market that after the bell yesterday, I'll zoom in. You can see S&P futures, they rose up here about 10 points. And this was on comments from Larry Kudlow, U.S. Economic Advisor, with just some positive trade war, optimism there. And the futures really didn't move after that. They just kind of stuck. And, we've seen this morning the market open and sell off a little and then bounce right on back. But, very low movement overall, since those comments. And, rightfully so. There's not a lot to really react to outside of those comments. And so we see, semiconductors, tech names, things that will do very well if some of the trade war ends, are bouncing very nicely. Small caps lagging today, and for good reason, with the market trading on those comments. And we're not immune from more comments, coming for going forward. All eyes of the market are going to be on that here. Okay, so I'll be back on in the close. We'll take a look at Micron, Netflix, and Coca-Cola, and anything else that may possibly trigger. I sure don't want to go into the weekend in cash, but we'll wait for a trigger to come in to make a trade there. Now I do want to talk about an omen that I've talked about before. But, we saw it emerge yesterday, and we saw, several of the blogs out there and, even some of the market news areas out there come out and, talk about this and put it into play. That is the Hindenburg omen. And I love stuff like this in the market, right? You have something, you give it a big, bold name, and all of a sudden everybody pays attention, right? If you have the Hindenburg omen, I mean, you think about the Hindenburg, right? It crashed. Okay, Hindenburg omen must mean the market's going to crash. Fine. You come up with something mathematically to say, hey, you know what? Odds are market's going to go down. You slap the name Hindenburg omen on it, and now everybody pays attention, right? Which, let's face it, it's why why people are talking about it, right? If it was just called the downside market risk indicator, nobody would be talking about it. But they called it the Hindenburg omen. More power to them. The Hindenburg omen, so everybody's going to pay attention. And here's the thing about the Hindenburg omen. The Hindenburg omen was incredibly accurate for a long time. And then here in 2016, at the end of 2016, it was Hindenburg omen this, Hindenburg omen that, Hindenburg, right? Market's going to crash because the Hindenburg omen, and all we have are the Hindenburg omen, and the market, has zoomed on higher, over 50% higher since then. Okay, so it's one of those, like any other market indicator. Yeah, it works. Right? It works if you have enough signals, but it doesn't mean each and every signal works, right? And that is something that I know a lot of market participants struggle with. They look at something, they see the track record, it works 70% of the time. They go get in, it doesn't work, and now it's, oh man, I ruined the indicator, right? There's that mentality. No, you didn't, but it does feel that way. Well, Hindenburg omen is something that I don't subscribe to. I don't care about a Hindenburg omen, right? But it is something that I pay attention to in a different way, okay? And earlier this week, I talked about some of the weakening of the market vibe, some of the weakness we started seeing come in there. When we look at the entirety of the market and just some of the changes that are happening there, and one of the elements that the Hindenburg omen, even the market vibe takes into account to some extent here. I believe MarketWatch also talked about the Omaha Titanic syndrome. Talk about a name, right? But all of these things, they kind of base off of this. And in this chart here, the NYHL, and you've seen me bring this up many times, but this is the number of stocks hitting new highs versus the number of stocks hitting new lows. And the idea is this. The idea is that if the market is hitting more new highs than new lows while going up, that's a bullish sign. But right now, the market is not hitting a lot of new highs relative to new lows, sitting near an all-time or at an all-time high. And so the idea is, okay, the market's running out of steam. Doesn't have as many participants. It doesn't have as many stocks, following it. It's just being led by a key handful of stocks, right? That's kind of the base idea here. If we go back to 2016, in fact, let me pull up the. Let's go back 3 years here, see if that gives it to us. Not quite. Let's go back 4. Here we go. But if we come back to 2016, you can see right through here, this period of August, September, October, we saw the market not setting a lot of new highs, right? In fact, went below zero to where more new lows were being set than new highs. That's often a sign that, hey, you know what? Things could roll over. Things could fall apart. But we know what happened. In fact, if I just come in and put on the price of the market, we can kind of just see how this plays on out, right? Let me hit, let's see here. If Annotate will bring it up on the entire screen here for us. Yeah, there we go. But we got to see how this plays out. Let me just add some vertical lines, right? Here we go. A lot more new lows than new highs. What happened? Oh, yeah, the market bottomed out and flew higher. Okay. Right here, a lot more new lows than new highs. Didn't really stop the market, right? Right here, a lot of new lows versus new highs. Yeah, market rallied. We could see right here a lot more new lows than new highs. And yeah, the market fell off, right? The market really kind of fell off sharply. Right here, a lot more new lows than new highs, and market rallied, right? So it's just been one of those things where it makes a lot of sense, right? A lot of common sense to say, look, if the market's setting more new lows than new highs while the market's sitting at a high, the market should probably go down. Makes a lot of sense. But when we look at the data over the last 3, 4, 5 years, it doesn't. It makes sense over the last 30 years, right? Over the last 30 years, it works really well. Over the last 4 to 5 years, the market's changed dramatically. It has changed. The market is an absolute new beast than what it was 10 years ago. It's very different in so many ways. And that's one of the best things about the market is it's constantly evolving, constantly changing. And one of the things that we see is that, look, there's not a great substitution element. So when we start to see a lot of new lows come in, you know what? That's where investors are starting to, step in, rather than going, I need to go rotate into bonds. There are a lot of different ways we can look at this, right? We can look at the Hindenburg Omen. We can look at the number of new highs versus new lows, right? We can look at something called a McClellan oscillator, all right? So let's go NYMO, I believe it is here. Yeah, there we go. But this is something called a McClellan oscillator, and this takes in the highs versus the lows. And one of the things we rarely see is a market hitting new highs while the McClellan oscillator is negative, right? We don't see that very often. That's a very rare thing. We'll see when the market hits new lows that the McClellan oscillator is sharply negative, right? You look at all these big lows, the McClellan oscillator is down below 100. And when you look at the last several times markets hit new highs, the McClellan oscillator has been up here, above 50 and 60. But right now, we have the market hitting new high, and the McClellan oscillator keeps going down. It keeps falling and is negative, right? And this is kind of the same concept as the Hindenburg Omen, but this idea that, we just don't have as many stocks participating, as many stocks hitting new highs, and from a individual trader standpoint, we can see that. We can go out to most charts that are on the challenge watch list; they're not hitting new highs. Right? Netflix nowhere near a new high. We do have Microsoft, we do have Apple, right? But Bank of America, not a new high here today. We don't have, in fact, I suspect 85% of the stocks on the challenge watch list don't have new highs today, somewhere around that, right? When the market's setting a new high. And so there's some consternation that gets turned up with this, and rightfully so. Right? Now, not only are we not seeing, new highs come in to the same degree, but we are seeing the volume element here be a little bit different. Let's come in here and put the volume element of the McClellan oscillator in, and it's giving me all the dots here, but we can see that right here it's at -10, and it's probably pretty light on your screen. But we're also talking about some, the volume oscillator for the McClellan oscillator being negative when the market's hitting a new high, right? And so we're seeing this in a lot of these breadth indicators where we're just starting to see some cracks, some warning signs coming in. I mentioned it earlier this week with the number of stocks trading above or below the 7-day moving average. And what did I say? I said, look, this is not bearish confirmation. This isn't, hey, the bears are ready to run. This is a warning sign. That's it. It needs confirmation, and it has no confirmation at all. And we've seen that the number of stocks trading above the 7 is gradually increased here this week. The Hindenburg Omen's the same thing. The Hindenburg Omen's a warning sign, but it needs confirmation. You can't go out and just say, you know what, I'm going to go get bearish on the market because of the Hindenburg Omen. You're going to get your fingers sliced off more often than not in this market environment with that type of mentality. And so, yeah, Hindenburg. What's the other one that Market Watch had? The Omaha Titanic syndrome. Whatever way you want to look at it, whether you want to look at 7-day moving average breadth, which is my favorite way to look at it, whether you want to look at it, in terms of a McClellan oscillator, but it's a warning sign. And that's it. That's it. Warning signs, they don't necessarily mean something, right? I mean, I'm going to go down the road this weekend, and I'm going to be driving on a road, and I'm going to be going 65 miles an hour, and I'm going to see a sign that is warning me that deer might be crossing, right? It's going to be a warning sign. It's going to be something that could happen, but the chances are pretty slim. I'm probably not going to slow down all that much, but I'm going to be a little more watchful. I'm going to be looking for deer. I'm going to be saying, hey, you know what? Oh, okay, is there one crossing the road? I'm not going to fall asleep on it. And I think that's exactly what, we're seeing in the breadth indicators like the Hindenburg, like the 7-day moving average here this week. It's basically a deer crossing sign out in the middle of nowhere while you're driving down the highway at 65 miles an hour. It's a warning sign, and yes, something could happen. You keep your eyes out, but there's zero confirmation. You're not going to see a deer sign and start now going 25 miles an hour because you see that warning sign, right? It doesn't make any sense. And so you're not, that's essentially what selling this market is, in terms of, paying attention to those indicators or those warning signs. It's basically dropping down to 25 miles an hour. It just doesn't make a lot of sense. You keep your eye open, you wait for a little confirmation, and, we get a little confirmation. Yeah, the story will change. But right now, story hasn't changed, right? We're not talking about big up moves in the market. I mean, today we're up 11 points. It's 0.3%, right? Yeah, we're talking about just some micro moves over time that add up to a pretty substantial move, which is nice to see here for the market. All right, so that's my thought there on the Hindenburg omen, the Titanic syndrome, whatever you want to call all these. They're warning signs. And that's about it. That's about it. To go on the other side, and we mentioned it yesterday. What else do we have? Well, when we've seen S&P futures, when we've seen news come out or a report come out that trade war is something negative, it's not progressing, we've seen sharp drops. They're not very big, but they get bought back up very quickly. We had a positive piece of rumor or talk, right? Market popped up. Did it sell off like it has on the negatives? Nope. It simply hasn't. And, we continue to see this pattern where, the market reacts more favorably to the positive than it does negatively to the negative. And as long as that's in play, it's very difficult to get, to get heavily short in this market or to get, overly bearish here on this market. All right, my apologies. I'm going to pause here for 20 seconds. 1 second. Okay. All right. Sorry about that. Before I jump off here, I'm going to go back to Netflix. Michelle passed me a note asking me to go take a look at this. And I talked about it earlier on the video. I've gone on the rant before about Netflix and, why Disney Plus is a positive for Netflix and not a negative, right? And Netflix has sold off here, with the whole emergence of Disney Plus, and Disney Plus is going to come out and all of that stuff. But it's one of those that I believe is a big positive, and here's why. Right here's why. When you look at Netflix is how much, right? In fact, let's just go take a look, right? Netflix price. Right, how much does it cost to sign up for Netflix? Let's come to the sign up. We'll choose our plan. All right, we have a basic $8.99, a standard $12.99, and a premium, $16.99, right? So let's just say $17, right? $17 for Netflix, right? What's the price of Disney Plus? Well, it's $6.99, right? So it's $7, right? The total price of these is $24. How much do you get in terms of content in them? You get a ton, right? There's an absolute boatload of content here between them. Yeah, you don't get sports and all of that, but you can add those, right? You can start adding those. You could come in here and add something like a Fubo TV, or a Sling, or even just kind of a CBS app or ESPN. You can come and start adding these, right? And yeah, you're going to start piling in the price, and you're going to start getting up to, you can get up to $100 a month. You keep on going. You want the show times and all of that. Yeah, you can get up to about $200 a month, right? But you pretty much at that price, you have access to everything. I mean, you have Curiosity TV, you have, you have YouTube TV, you have Hulu. You have it all, right? You have it all. There's not a lot of content you're missing out on for $200 a month. Well, you go take DirecTV, right? You go take Comcast. And yeah, they have their basic packages, right? DirecTV, if we come in here, DirecTV price. If we come in here, we can get a good offer. There's going to be some great offer in here. We're going to get $100 off. And yeah, they're not even going to give me a price right on here, but we're going to get a good offer, right? We're going to get something decent. But what's going to happen? We're going to have to pay a lot of the taxes and fees. We're going to have to pay a lot of the, for having different receivers and having the HD and having the DVR. We're going to get nickeled and dimed to death, that where if you have a TV in 2, 3, 4 rooms, you're up almost to $200 if you get the same amount of material to watch that you got with the hodgepodge of the streaming services. What's going to happen? What is happening? Well, we are seeing people cut the cord to a DirecTV, to a Comcast, to some of these other, providers. Disney Plus is what? Disney Plus is another catalyst for the cord cutting. For those that haven't, just gotten rid of some of these more old-fashioned types of viewing experiences, they're still valid. And hey, you know what? There's still some good stuff, and it's easy and everything else. But Disney Plus now gives incentive to say, you know what? I can now get more if I cut the cord. And you can go cut the cord, and you can go and say, well, I'm going to get rid of DirecTV. I'm going to go get Disney Plus. And you know what? I have a lot of money left over, and I can get Netflix too. And I think that's ultimately what we are going to see as we go forward in the months and years ahead, is that Disney Plus is a catalyst for more people to cut the cord. And as more people cut cord, Netflix becomes relatively cheaper. Netflix becomes a kind of a must-add for most people. And I do think we will see the subscriber numbers go up on Netflix. It's not going to be one of those where people are choosing, do I get Netflix or do I get Disney Plus? Do I get Netflix or do I get Disney Plus? Sure, some people will. But with the pricing of them, with the cord cutting element, we're talking about an industry that's evolving, an industry that is changing, and that change positively benefits both Netflix and Disney Plus. And I do think that Disney Plus ultimately is a positive catalyst. And I understand the reasoning for why people say, well, no, there's got to be a substitution. People are going to get Netflix or Disney, and people are going to cut Netflix and go get Disney. And yet we may see some of that in the initial numbers. But long term, I think Disney Plus is an absolute positive for Netflix in so many ways. And ultimately, are they going to be competitors for many years to come? Yeah, you betcha, right? But back in the 90s or even the 2000s, Apple, Microsoft, competitors, you betcha. Amazon stepped in 4 or 5 years ago to compete with Adobe and Microsoft and CRM and the other cloud distributors. Benefit for all of them, right? When you're talking about an industry that's transforming and growing, there's room for competition because of how it grows. And we do see that, this is just one of those where that added competition, the way I look at it, the way I see it is that, over the coming years, it's a big positive. And, that's one of the reasons why I continue to be bullish on Netflix and will continue to be bullish on Netflix. And I will be very surprised if Netflix doesn't set a new high next year. Thanks for hopping on. Have yourselves a great one. We'll talk to you later. Take care.